Welcome to Spiedel's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're covering which taxpayers are winners and which are losers under the provisions of the One Big Beautiful Bill Act. We'll be covering the act in detail at Spiedel's Federal Tax Update webinar on December 18th and 19th. For more details, go to spiedel.com and click on webinars. Every tax bill has its winners and losers. We've compiled a list of the most notable winners and losers under the One Big Beautiful Bill Act. Non-itemizers are winners because we now have more deductions that are available to people who don't itemize. The new deductions are the personal exemption deduction for seniors, the qualified tips deduction, the qualified overtime deduction, the qualified vehicle loan interest deduction, and the cash contribution deduction for non-itemizers. Educators received a number of benefits from OBBBA, including that unreimbursed employee business expenses of educators are classified as non-2% miscellaneous itemized deductions starting with the 2026 tax year, making them deductible once again. In addition, OBBBA retains the ability of K-12 educators to deduct the first $300 of unreimbursed employee business expenses as an above-the-line deduction. Beginning with the 2026 taxable year, OBBBA expands the types of expenses that are eligible for the above-the-line deduction beyond just those items that are used in the classroom, and allows sports administrators and coaches to benefit from the deduction. Small business owners are also winners under the bill. The qualified business income deduction under IRC Section 199 Cap A was made permanent and was modified in two ways beneficial to taxpayers. The phase-out range is increased, allowing a deduction for taxpayers with slightly higher income than allowed before 2025, and a minimum deduction is available to small business owners who materially participate in their business. OBBBA contains multiple provisions that benefit taxpayers with children. Trump accounts provide for IRA-like tax-deferred investments for children and don't require earned income for contributions. There's a pilot program to provide up to $1,000 of government seed money for newborn children, and employer contributions are allowed for employees' children as a pre-tax benefit. The child tax credit is permanently increased from $2,000 per child to $2,200 with future inflation adjustments. Up to $5,000 of adoption credits are made refundable beginning with the 2025 taxable year, and the maximum child and dependent care credit rate is increased from 35% of eligible costs to 50% for lower income taxpayers beginning with the 2025 tax year, which provides a higher credit amount. Other winners include startup businesses because of an expansion of the qualified small business stock eligibility rules, asset-heavy businesses because of the return of 100% bonus depreciation, and research-heavy businesses because of the elimination of the mandatory amortization of domestic research expenses. The biggest losers under OBBBA are clean energy businesses that rely on tax credits to make their products more attractive, including electric vehicle manufacturers, solar panel manufacturers, and others. OBBBA terminates various clean energy incentives, most of which are tax credits, earlier than previously scheduled. OBBBA makes the TCJA tax brackets permanent, which is a win for high earners because the top marginal tax rate remains at 37% instead of the 39.6% rate that was scheduled to go into effect in 2026, when many TCJA provisions were scheduled to sunset. However, once we get past the lower tax brackets, high earners mostly lose due to the phase-out of the SALT limitation and the new overall limitation on itemized deductions. We covered this topic in a recent issue of Spiedel's Federal Tax Letter, a monthly newsletter plus a searchable online archive of back issues that keeps you at the leading edge of the federal tax issues that impact your clients. You can get more details and subscribe at spiedel.com under Publications. That's all for this week. Join us next time for another episode of Spiedel's Federal Tax Minute.